Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody. This is Mark Maneri, your host of the National FAIRtax Webinar. And I'm really excited for tonight. I am joined for the first time by a gentleman by the name of Jade Wally. Jade, if I have mispronounced your last name, then you can admonish me. But
you got a perfect one.
Thanks, man. Yeah, Jade is just a wealth of knowledge and resources, and is a real interesting perspective. And Jade's going to be with me as a co-presenter tonight, and also going to be really taking the lead on some of the latter part of the presentation, where he compares the most recent tax legislation that was just signed into law with the fair tax. And to say more about Jade and why I'm so excited, Jade is a partner at a Big Four public accounting firm and has been so in this industry and with his firm for 21 years. So super experienced, has both his bachelor's and master's in accounting. Has lived all over the country and in London, England, has been a presenter of the FAIRtax at the Oklahoma State University Financial Reporting Conference in 2014, has been interviewed on FAIRtax Power Radio by Bob and his colleagues, and man, just comes to our call with some energy, with some vigor, and with a lot of knowledge, and with an extremely unique angle given what he does in the world. So I just want to say, Jade, welcome, and thank you for being here.
Thanks, Mark.
Okay, great. So if you're just joining us for the very first time, and I know there are some new timers on the call, we want to welcome you. Thank you for taking some time out of your evening to be with us. And our intention here, as it is on the fourth Thursday of every month, is to educate. What you're going to learn about tonight, if you're new, is a piece of legislation that currently exists right now and has existed for some time in Congress that we believe is really valuable and will make an extraordinary difference for our country in a number of ways, and we'll present on those ways tonight. And we invite you to ask questions, to be engaged, and I'll share about that in a second, and ultimately to use tonight and tonight's educational platform to determine if this legislation aligns for you. And if it does, then we request that you actually do something about it. And we'll show you some really powerful ways that you can support this legislation and this cause that we believe, again, can make such a big difference for our country. So thank you for being here, and especially thanks for the names that I see month in and month out. I appreciate and recognize the support. And man, I've been operating in this capacity for 9 years, and some of you that are on the call, Dave Leake and Randy and Ron Malero and anybody else, if I've left you out, have been just fighting this fight for 9 years with me, and some of you longer. So I acknowledge you and I honor you for it. So with that, we're going to jump in here, and the way tonight will go is I'm going to give about a 20-25 minute overview of the main merits of the FAIRtax, and I'll ask Jade to share some of his thoughts during that, and then we'll pause and we'll take some questions, and then I'm going to turn the floor over to Jade, and Jade is going to do a really cool comparison between the Trump tax reform that just passed and the FAIRtax. And then we'll finish off the night by answering the remaining questions that you have between Jade and I and Randy and Ron and Bob that are on the call. We believe we can get your questions answered. And if we can't, then we'll research it and get back to you. So last thing is on your control panel, there's a couple ways you can get our attention. So one is at the bottom, you should see a place where you can type in a question. When you do that, it comes to us and we can see it. And so we will speak to your question when it comes in. And you can also put your hand up and we see that. And if you are compelled to actually be live and let us hear your voice, we would love that. And you could ask your question by putting your hand up. We will unmute you and then speak to you live. And we've got a really great audience tonight, people from all over the country joining. So thank you, welcome. And yeah, here we go. So, I love this graphic. Well, yeah, maybe I should say I have a love-hate relationship with this graphic. So in one sense, it's staggering to look at. We've got a tax code that today is over 75,000 pages. And, it's just so overwhelming that it's nothing that a single individual or entity, even for that matter, can be an expert on and have mastery in. And I love it because it shows in a just a extraordinary way that we need something far beyond, what we believe the tax reform that just occurred. We need something that wipes the slate clean and really puts our country and our economic future on the right path. And man, what we've got right now is broken, even with the tax reform. And you'll learn more about that when Jade speaks to it later today. So when we look at our current tax code, again, even with the reform that has been signed into law here recently, there's 7 key points that really create drag on our economy. And what we're going to show you is what they are and how the fair tax systematically eliminates them and does just the opposite and puts us on really solid footing. So number one, by what you just saw, the graphic you just saw, it's really convoluted and confusing. It punishes growth and expansion and inspires the wrong behaviors. And, think about that for a second. With an income tax-based system, when you make more money, you pay more taxes. And at some point, businesses and individuals reach a threshold whereby the idea of creating more wealth and more money and more profit reaches a point of diminishing returns given the current tax system. And that's not what we want. We want the opposite. So we'll talk about how the fair tax inspires the right behavior. So lack of transparency and loopholes, it's incredibly inefficient. We'll speak to all these things, impedes privacy. There's winners and losers. And what we mean by that is, for those of you who may remember back when Mitt Romney was running for president, this was a big deal. What his effective tax rate was less than what many really struggling low-income American earners had. And of course, the amount that he paid was a lot, but his effective tax rate was really low. And so in our current climate, in our current tax system, if you know the right people, if you've got connections, and if you can afford to employ experts, well, you can circumvent this system in many ways. And the fair tax, it just eliminates it. It creates a level playing field. So we'll talk about that. And incredibly time-intensive and laborious. And if you could see me right now, I'm sweating from this bullet point because I'm self-employed and it's tax time right now. And the amount of time and energy that goes into pulling everything together, even with a full-time bookkeeper that I employ and a tax accounting firm who handles my taxes, it's just I don't want to do it, and it takes time away from me putting energy into reinvesting that creativity into my business and into my clientele. So more on this as we work through it. And we've got a solution. And we believe the solution is the Fair Tax Plan. Again, it's legislation that exists known as HR 25 in the House, S18 in the Senate. And as we break down these 7 keys, the first thing to know is the fair tax is extremely simple. It's 131 pages double spaced. You could, I've read this legislation and I understand it. I don't have to be a legal expert. And man, there's something to be said for simplicity. Like really. And while I recognize the complexity of America and of the different classes and of, all the different people and the different interests, and, you can't please everybody. However, we believe that the fair tax takes an extraordinarily objective approach and creates a revenue generating system for the government that is advantageous for every single American and every single business. So, we talk about this. I talked about this idea of punishing growth and inspiring the wrong behavior. The fair tax is a consumption tax. It's not an income tax. It's a huge distinction to make for those people who are new on the phone or new to this presentation. Is when you look at the tax reform that happened, the Trump tax reform that we'll speak to in detail later, when you look at what you may have heard of as called the flat tax, and all other income tax reforms that have been put forth, they are still income tax systems, and income tax systems are incredibly regressive. So with the fair tax, based on how much you spend, you only pay taxes on what you spend, not on what you earn. And the fair tax will eliminate all federal taxes with sister legislation that will repeal the 16th Amendment, which is Congress's right to tax income. So the estate tax goes away, capital gains taxes go away, personal and corporate income tax goes away, the FICA taxes, Social Security and Medicare taxes go away, the death tax goes away, alternative minimum tax goes away. So all these convoluted taxes get eliminated in one simple system. Man, it makes so much sense. And what we love about the fair tax as much as anything is that it's in its simplicity, it creates transparency. There's just one tax. A consumption tax on new, not used. Used goods are untaxed. New goods and retail services. Yeah, at the retail level, meaning business-to-business transactions are not taxed. So actually, I like to give an example of this just to illustrate this for people and have it be really clear. So imagine a home builder that builds homes and sells them at the retail level to consumers. So when the home builder purchases inputs for their home, everything from land to all the materials that go into building a home, they will not pay the fair tax on that. When they build the home and it's ready to be sold and they sell it, the fair tax is included one time because it's considered a new good, right? And the fair tax, which occurs at the 23% mark, is embedded in the cost of the home, which means that just for simplicity's sake, if the home was priced at $100,000, the home buyer, the consumer, would pay $100,000, and the builder would collect that, and they'd set aside 23%, or in this case, 23 grand, and they'd set that aside to be remitted to the Department of the Treasury. And then when that consumer lives in the home for however long they live in it, and then they resell it, it's now considered a used good, and the fair tax is not levied again. And however many times that house turns over into the future, the fair tax does not occur because it's considered a used good. All right. So there's a lot of benefits of the fair tax for businesses and trade and our federal government, and we'll highlight these here. So right now it's estimated that likely $120 trillion in global personal and corporate assets from all around the world, not just Americans, but across the planet, are parked offshore. And many of these assets would come into the United States if Uncle Sam didn't take a big chunk out of it when it came back in. So when the fair tax gets implemented and capital gains taxes go away and personal and corporate income taxes go away, man, this money is going to start to free flow back into the economy, estimated to the tune of $1 trillion, just organically, right? Like we're not going to have some stimulus package. Just organically, $1 trillion coming into our economy because business owners and investors want to do with their money what they know to do best with it, which is to invest in financial instruments and in infrastructure and in businesses that have made them the money in the first place. So, I'll actually pause here and I'll ask Jade to take himself off mute. And I think Jade would be an interesting place for you to just chime in and share your thought about this. Jade is somebody who works with many of the largest corporations in the world and audits them and supports them in their financial investments. And Jade, what would you say about this point and the removal of the corporate income tax and the FICA taxes and the capital gains taxes? What else might you contribute to what I've shared so far, given your unique vantage point?
Yeah, thanks, Mark. It's interesting. There was a informal survey done by the former House Ways and Means Committee chairman about a decade, maybe a dozen years ago, and he had asked many businesses from abroad, et cetera, and U.S. multinationals as well. And he said, and he described the fair tax, but he didn't call it that. And he said, if we had a system where you had zero corporate taxes and we actually didn't have taxes embedded in the cost of all items produced in America along the way, be it payroll matching, employer taxes, et cetera, and we had a system where you could export it from America without paying any tax, what would you do? And about 400 or so out of the 500 companies said we'd build our next plant in America, and the other 100 said they'd move their entire headquarters to America. So it just gives you a little bit of a vignette of the effect, if you really had a fair tax system, what it might mean to our economy.
Yeah, that's brilliant, man. Thank you for that contribution. And to that end, U.S. becomes a corporate headquarter haven. Think about it. Jade, he spoke to it better than I could. But, one other thing I would add to it is in the last year or so, it's a term that's been used quite a bit and frowned upon, and Trump has been very vocal about it, is this thing called inversion. And inversion is the idea where U.S. based companies move their corporate headquarters, their international headquarters overseas to more tax-friendly environments, like Ireland, for example, who has one of the lowest corporate income tax rates in the world. And, you've got big tech companies that and manufacturing companies that have moved their in corporate headquarters over there. And what does that mean? They're just what Jade said. They're building infrastructure and plants, and they're hiring staff. Like all of that could be happening in the United States, right? We go from whatever the corporate tax rate is, which Jade will inform us about later with our new tax reform. But imagine it's zero. yeah, it's just going to be a boon to our economy. It's just really amazing to think about. And then the underground economy, which is estimated to $2 trillion, they pay their fair share. So you've got, everybody from people who are avoiding the tax system to illegal aliens, etc. Well, every time people go to the grocery store or go to go to the mall or buy a new house or a new car, whether they pay in cash or whatever, they're paying their fair share, and we broaden the base, and man, it just really mitigates the risk that the current tax system has embedded in it, where people are just constantly looking for and taking advantage of ways to game the system and avoid it. So a lot of other things to say here, one of which I'll just add that when the mortgage crisis happened, it was estimated that if the average American had between an additional $500 to $1,000 in disposable income, millions of families would not have lost their homes. They would have been able to afford the adjustments in their interest rate and been able to keep paying their mortgage payment. And that's pretty amazing to think about. And I'll explain this in detail a bit later in the presentation, but the average American's income will go up by about 29%, their take-home pay, when the fair tax gets implemented. And the Americans will have more disposable income than they've ever had before. And man, that is going to mean some incredible spending and investing. And that's exciting. So you look at our currently system, incredibly inefficient. The fair tax, exact opposite. So, we get so much more efficient. So what will happen is the states will likely collect from the businesses, and 45 states already have a state sales tax, so the infrastructure is already in place. And we get 80% more efficient in raising this revenue, because we'll go from 18 to 20 million businesses instead of 120 million households. That's just really smart. There's just one simple form to fill out, which basically says, here, what were your gross receipts? Take your gross revenue, multiply times 23%, and that's how much money you remit every month or quarter to the your state sales tax bureau, who then passes it on to the Department of the Treasury. And man, it's just simple when you look at that. Can you imagine Americans who don't ever have to deal with taxes again, and businesses have a one-page form to fill out? The energy and the creativity that can be reinvested back into our lives in a variety of ways is astounding when you think about that. And right now,
hey Mark, quick interjection here.
Yeah, please go ahead.
And sorry, Mark, but when you say businesses, and remember, the vast majority of businesses are businesses that sell to other businesses, and they'll have no forms, no reporting whatsoever. Only businesses that sell at the retail end user level will have any kind of reporting whatsoever, which is actually a small percentage of all businesses out there.
Yeah, love it. Thank you. Yeah, so you look at the inefficiency right now, IRS costs $13 billion to operate annually. They only collect 75% of what it should. I mean, fair tax, along with its sister legislation, will eliminate the IRS in a 3-year period. So pretty exciting thing to happen for this country, where, April 15th literally just becomes, as we like to say, another delightful spring day, and there's not months of stress and anxiety and unproductive energy that goes into remitting your taxes. So I love this. Privacy protected and efficient. So you pay your taxes when you make your purchases. We talked about that. No filling out detailed forms. And man, simple, fair, transparent. So here's a fairness part that we like to talk about, that's really important to talk about. And it's called the prebate. And the prebate is a component of the fair tax legislation that is just brilliantly written in, and it assures that no one pays federal taxes up to the poverty level. So opponents and demagoguers of the fair tax, man, they really like to speak out against the fair tax in a non-truthful way. And often the way this happens is, as I shared earlier in the presentation, the national sales tax rate will be 23%. And the demagoguers like to use that to their advantage by saying that their opponent, whoever's supporting the fair tax, wants to raise or intends to raise taxes by 23%. And of course, they conveniently leave out of that statement that dozens of federal taxes will be eliminated, including and especially all income taxes at both the personal and corporate level. So, and then they will go on to say that the fair tax is just going to really hurt lower income class Americans and even middle class Americans. And man, that couldn't be further from the truth. And the prebate is a component that assures that. So the prebate, well, we'll just show you with the chart here. So I want you to move your eyeballs to the right side of the screen. And if you move down to the green section, see what the prebate does is it has taken a spending, what is called the annual consumption allowance. So basically, let's call it a spending matrix that the Department of Health and Human Services has created, called the annual consumption allowance. And it reimburses households, qualifying households, in advance for the amount of money, the amount of fair tax they will have paid over the course of the month up to the poverty level limit. So here's an example. So a family household with 2 children, keep your eyeballs on the green section. The Department of Health and Human Services says that a family with 2 children spending at $32,480 a year will be spending at the poverty level limit. And anything over that is, puts them out of poverty level limit spending. So if you take that $32,480 and you multiply it by 23%, the fair tax rate, then the amount of fair tax that family would pay on their basic necessities on that $32,000 is $7,470. Divide that by 12 months of the year and you get $623. So what the prebate does is it will direct deposit at the beginning of each month $623 into that family's bank account, effectively reimbursing them in advance for the amount of fair tax they'll end up paying that month on all the spending that they do. So if you think about that, we've reimbursed fair tax responsibility up to the poverty level limit. People can choose to purchase used goods, and because we've eliminated income taxes and the FICA taxes, Medicare and Social Security taxes that gets withheld from your paycheck, you no longer have a withholding to your paycheck. So between the prebate and the ability to purchase used goods instead of new goods where you'd pay the fair tax, and you take home 100% of your gross pay, which now becomes your net pay, the average American income is going to increase by 29% or more. So, like, the fair tax, not only is it not harmful for lower income class Americans, it's incredibly empowering. and puts them in a much better financial position as it does all Americans. Yeah, so that's the pre-bait, and feel free to write in any questions if you have about that. So the last thing that I'm going to present on here before we take pause and ask for questions is the impact on prices. So it'd be a very easy thing to think that with the new tax of 23%, the new sales tax of 23%, that prices are going to go up by 23%. That's not true. And the reason why is because there are some embedded expenses that are currently at play right now in our current pricing and economic system that once the fair tax is implemented will come out of this system. And so what we mean by that is right now business income taxes are passed off to the consumer. So not only do we pay as a consumers, we pay our personal income taxes, we effectively pay business income taxes. You know, and Jade, I'll say something and you could certainly speak to this, but you know, all the businesses that I know of that are savvy will look at their business income taxes and basically include that as a line item expense in their profit and loss projections, and they will create pricing around that. So in other words, over the course of the year, all the people that buy their goods and services essentially are paying a higher price because businesses are putting their costs to comply to the federal business income tax code and their actual business income taxes and in as expenses in their profit and loss model. And we pay that when we purchase goods and services. So yeah, Jade, is there anything else that you would speak to about that?
Yeah, Mark, you said it well. I think the thing to remember is businesses, corporations are not people. They don't have a heartbeat, and they ultimately don't pay taxes. People pay taxes. So when businesses pay taxes, it comes in the form of lower wages, more higher cost of the widgets you're buying, less dividends to the owners and your 401ks and your savings, or less distributions to other owners. So yeah, it hurts people ultimately when companies pay taxes.
Yeah, great. Thank you for sharing that. So the cost to comply plus the income taxes themselves are what we refer to as the embedded tax. And that's equal to approximately 22% costs in all retail goods across all different sectors. So, when the fair tax gets implemented, the embedded tax gets eliminated because, again, personal and corporate income taxes and FICA taxes, they all go away. And then the fair tax of 23% gets put back in. Now, this isn't going to be a wash. And there's some pretty complex reasons why it isn't a wash, but for the purpose of this presentation, we would tell you that prices will likely go up by 10 to 15% in the first year when the fair tax gets implemented. But with the average American's income going up by 29%, everybody is still in a better place. And as companies seek to take away market share from competitors, they're just going to lower their prices over time. And within the matter of a few years, we expect prices to be back at pre-fair tax levels. So, yeah, pretty amazing when you think about it. So given all that we've said, remember up front, we said there's 7 keys to a super progressive, healthy, vital tax system that creates a real advantageous economic climate for us, and the fair tax checks the box on all of them. So if that's the case, then why would anybody be against it? Well, anybody's current income, and we should say job, is derived from the current tax code. So 50% of lobbyists are tax lobbyists. And if they're not lobbying the federal government to tweak the corporate tax code, then, their job is threatened. So they're telling their politicians who support them to, not support the fair tax. And of course, politicians have transparency now that they're going to be held accountable to. They can't just rewrite some of the 75,000 pages of the convoluted tax code that we have to pay for a pet project in their district. And they don't like it. Of course, you got IRS workers who's going to lose their job. So when you hear a politician say that the fair tax is no good, you could absolutely count on the fact that they're doing that out of self-interest. And likely they're not even educated on what the fair tax is. Of all the co-sponsors, many of the co-sponsors, or I should say most, are Republicans. And the Democrats, who are supposed to be quote unquote for the people, my gosh, if they could see it, the fair tax would be their greatest ally. Really. So be wary of politicians who demagogue the fair tax. They're operating out of self-interest. All right, so there you have it. That's the fair tax and its main points. And we're going to pause now, and we're going to, before we go into this special topic that Jade is going to lead us through, we are going to pause and take some questions. So I am going to invite my colleague Jade to take himself off mute, and I'm going to read through some questions, and I'm going to invite him to chime in with some of the answers. So, all right, here we go. So Paul writes in, and this is really early in the presentation, will the tax be added onto the retail price or included in it as it already is? And I believe I answered that, Paul. I know you wrote in before I had a chance to speak to it, but yeah, it is what we call inclusive. So in that example of the home buyer who purchases a home for $100,000, and they're paying the fair tax, it's included in the price. So they don't end up paying $123,000. They will pay $100,000, and then the home builder has to set it aside. So I think that's pretty straightforward. Yeah, a bunch of great comments here. Josh writes in, HR 1 is the status quo. That's the new tax reform. Bob Paxton writes in, we didn't get tax reform, we got tax relief. And he says the nuts and bolts of how federal taxes did not change a bit. Yeah, great thought. Thank you, Bob. All right, let's see. This is a question from Daryl. Daryl, thanks for your question. Daryl writes, does 23% still maintain the revenue neutral position? Meaning, if you're not understanding that question, what Daryl is asking is, the federal government, through our current tax system, collects a certain amount of revenue every year that it needs and is required to operate in all of its operations. And will the fair tax raise the same amount of revenue? So I'll have Jade speak to that.
You bet. Good question. Yep, the fair tax, which actually one of my talking points on the comparison of the act versus the fair tax is revenue neutral. So that rate, that 23% inclusive rate, has been calculated with very complex PhD mathematicians. I've looked at some of the calcs and they're mind-boggling, but it's meant to be revenue neutral. So if we bring in $3.5 trillion now into the Treasury, this fair tax will bring in the same amount.
Yeah, it's great. Yeah, by the way, Jade, your microphone might be a bit close to your mouth. You're coming in a little bit overmodulated, so I just want to share that with you if you can attempt to adjust that. But we can understand you fine. Just want to try to be as clear as we can for everybody. Thank you.
You got it.
Yeah, and Jade, I'm going to come right back at you. So Josh asked the question, what is the difference between the estate tax and the property tax? Is that something you can speak to?
Sure. Am I coming in a little bit better, Mark?
That is better. Yeah, thank you.
You bet. Sure. The estate tax, it's a federal tax, although there's a few states that actually have an estate tax, and it's also called the death tax. So when you die, the amount of your estate, whether that be jewelry, cash, bonds, property, you name it, if it's over certain thresholds, is subject to taxation with the estate tax from a federal level and a few states. Property taxes, those are usually state and county based, where property taxes are funding things like public schools and roads and other things like that. And so that's usually a concept from a state taxing perspective. So kind of outside the realm of what we talk about here from a federal perspective.
That's great. Thank you. So question, how much will repatriation of offshore funds bring, and what might the effect be? And I think I spoke to that, Daryl. Thanks for your question. We believe it's estimated. Yeah, and by the way, here's something I didn't say. You know, there's been a lot of statistics and numbers included in this presentation. I want you to know, if you're new to this, that this isn't something that I'm speculating on. So the creation of the fair tax legislation occurred through $22 million of independent third-party grants, and dozens of the most, like really the most brilliant PhD economist minds went into the creation of the legislation. And so this, when we say we estimate $1 trillion, that's trillion with a T as in Tom, come back into the U.S. economy in the first year organically, you know, that's not us spitballing. That's some pretty bright minds out there who are looking at the whole global economic climate and having a zero effective corporate income tax rate and no capital gains taxes or any other taxes in that domain, you know, what it will do. But that's the answer to the question, Daryl. Thank you for asking it. All right, let's see. So we'll take a couple more questions, and then I'm gonna pass the microphone over to Jade here so he could speak to the comparison. So this question comes from Frank, who says, we didn't hear one congressman or woman or senator advocate for the fair tax during the tax reform debate, though we had dozens of co-sponsors. What is it going to take for them to lift their voices for us? Man, it's a great question. It's a really great question, Frank. And, you know, it's one that I've asked myself and grappled with for the 9 years that I've been supporting this. And I'll tell you how it occurs for me, Frank, and Jade, if you want to speak to it afterwards, please do so. How it occurs for me is that it takes real courage for somebody in Congress to speak up, and there's a lot of pressure not to do so. There's a lot of pressure to vote party lines. And not only that, the way that Congress is structured right now as part of their incentive package is if they get reelected once, they get benefits, full benefits for life. And if you think about that, that's extraordinarily myopic, and we're absolutely incentivizing the wrong behavior. And so, you know, I think what it's going to take is more pressure from constituents that say, if you don't support it, we're going to vote you out of office. And it's going to take some courage for some real human beings that really see something in this. Yeah, Jade, would you add anything to that?
Yeah, I agree with everything you said, Mark. And I think it takes, you know, I've had a lot of people ask me, well, do you really think it's going to pass? And America has been known for doing great things. We've invented the airplane, the automobile, we've gone to the moon, we've done amazing things. And will it be hard? Yes. But if everyone kind of takes it seriously, once you decide that you like this and you think it has merit, which once you really hear the facts, as Bob and Ron, who are on the webcast, say, once you understand it, you know, you'll demand it. It takes getting involved. You know, join the 1040 Club. If you're on fairtax.org or bigsolution.org, that's where you donate $10.40 a month to the grassroots organization that will actually help get the legal entities, forms filed and updated in with each individual state, and hopefully eventually have enough money to actually do more ads and get it in the public domain. The thing is, most people don't understand it. I talked to my congressman, he had never heard of it. But once you explain it, they like it. So I think if we just have everyone serious and take it as a serious task to help make this country better and really propel it for 100 more years into economic security. If we take it that seriously, I think we can get this done.
Yeah, really great. Thank you. So last question for now that we'll take from Maurice. And by the way, keep writing in your questions. We will answer them at the end. He asks, is the 23% a fixed amount or can it be raised by Congress? Great question. It can be raised by Congress. However, if the same body of constituents that put enough pressure on enough congressmen and women throughout the country that gets the fair tax enacted into law speak up, we have the power as a group to maintain the rate, because you're going to see it when you check out at the counter of any retail operation. You're going to see exactly what the national sales tax rate is. And if it's 25% the next time you check out, man, you have the opportunity to raise hell. So, yeah, Congress does have the power, and we have the bigger power to keep them in check. All right, keep your questions coming. We're going to come back to them. Great stuff. So I'm going to ask Jade, who's been just, putting some time and energy into doing a nice comparison for us here. And he's going to share some things with you that I think are going to really enlighten you. So, Jade, I'm just going to advance this for you. You tell me when to keep going. And in the interest of time, I know you could say a whole lot more. I know you could say a lot. Let's keep it to somewhere between 7 to 10 minutes in this so that we can get back to questions and get people out on time.
Okay, that's a tall order with me, but I'll give it a try here. Mark, Abraham Lincoln asked a colleague, he said, if I call this dog's tail a leg, how many legs does it have? And his colleague said 5. And Lincoln said, no, just because you call it a leg doesn't make it a leg. And so that's really the way I describe tax reform, like Bob's note in earlier to you. It's called tax reform, but it's really not. We still have 75,000 plus pages, etc. Some rates have been changed. Some things have been simplified. Is it good? Is it better than what we had? Absolutely. And no one's trying to say it's not. But is it real reform? I'd say the answer is no there. So let's go into evasion real quick. When we think about how much evasion we have right now, a recent PhD study shows that there'll be $9 trillion of evasion over the next 10 years. And it's about $800 billion a year. And as you may know, the past 8 years or so, we've ran about a $1 trillion a year budget deficit. So almost single-handedly, with evasion being virtually eliminated under the FAIRtax Act compared to our income tax, almost single-handedly, you could get rid of our budget deficit. That is huge. And the one thing that blinds our eyes is in the U.S. here, we are shielded because we finance so much of our government spending with debt. But imagine if no one would lend to us and we could only spend what we brought into our treasury coffers, we would be all over the fact that we have $800 billion a year not collected that should be collected. Some people say they counter that, Mark, and they say, well, we're going to a cashless society. Well, the lower rates will encourage people not to cheat. Absolutely not true. Once you've made that moral decision to cheat and not remit the taxes that are due, a lower rate's not going to help you change that decision. And also, this cashless society we have, because we have this gig economy now where people operate and work at multiple jobs, many without the traditional W-2, you're still gonna have the opportunity not to report income, whether it's cashless or not cashless. And a lot of fraud, evasion occurs with over-reporting deductions, not necessarily only under-reporting earnings. Moving on to revenue neutral. The Act, as you know, the Tax Cuts and Jobs Act of 2017 adds $1.5 trillion to the debt over 10 years, less the estimated $500 million it's projected to stimulate the economy with higher economic growth. So about, based on estimates, $1 trillion. Some proponents think that it'll stimulate the economy more, and it might. And we're already seeing some of the effects with, Apple's jobs announcement, bonuses being paid out by multiple companies, et cetera. And the question comes really around revenue neutrality. It's, okay, we lowered the corporate tax rate to 21% instead of 35%. And that's going to stimulate the economy, which helps make this a little bit more revenue neutral, but it's still not. But what would a 0% corporate income tax rate do to our economy, like we talked about earlier? It would almost be so much economic growth, we wouldn't know how to handle it. We'd have to have people lining up to immigrate legally to the United States, and it would just be an economy on fire. Economic GDP growth. Over the last 8 years or so, we've not had GDP growth above 2%. Now we've got it up to 3%, and everyone's praising that. Some people think with the Tax Act that was just passed, we might even get up to 4% here in the next couple of years, which is great. But let me tell you what some PhD studies show. Dale Jorgensen, former head of the Department of Economics at Harvard, says, based on his studies, there'd be a 9 to 13% near-term GDP growth under the fair tax relative to the income tax. We wouldn't know what to do with a 9 to 13% GDP growth. Our economy would be on fire. You would have to literally try very hard not to make a lot of money and get a job in what you want to do. Lawrence Kotlikoff, the head of the economics department at Boston University, projects 7 to 14% GDP growth under the fair tax. Another interesting thing, real wage growth under the fair tax, PhD studies, projected to go up 8%, output 12%, labor supply up 4%, and U.S. capital stock up 42%. Unbelievable economic growth and GDP growth under the fair tax relative to what we're projecting under the Tax Cuts and Jobs Act of 3 to 4% GDP growth. Again, it's much better than we had the past 8-9 years, but it's nothing compared to what the fair tax would be.
Amazing.
Let's go to class warfare here, Mark. I don't know about you, but I'm sure a lot of us on the webinar, Democrats say this about Republicans, Republicans say this about Democrats, and so much time is wasted on this class warfare. With the fair tax, the only real debate is, like one of the responders, one of the commenters, is what should the rate be? And what do you want to spend it on? That's the real debate. Oh, we need to spend government treasury funds on X, Y, and Z. Then we need to raise the rate 0.5%, 1%. Let's see if the people want that. That would be the only real debate. Right now, we have hidden areas of gray, like, for example, the home mortgage interest deduction, which lowers the receipts into the treasury. It's not spending per se, but it results in less net treasury funds, just like spending. All that hidden gamesmanship goes away with a simple consumption tax under the fair tax. Compliance costs and time spent. This will blow your mind. The time spent on complying with our code, businesses and individuals, 8.9 billion hours a year, $600 billion of costs to comply. And in my firm is probably some of those costs, because a lot of companies pay us to help them with their income tax situation. That is mind-boggling, 8.9 billion hours. Now, some of us might take that time and sit on the couch more and eat our snacks, but other of us think about the entrepreneurship, the ideas, things that could be done for productive purposes as opposed to complying with some arbitrary written tax code. Unbelievable. Let's see here, moving on to lobbying. There's about 12,000 lobbyists in DC, and next to pharmaceuticals, the next largest lobbying group is related to the income tax. There's been, this will blow your mind, Mark. In just 2017 alone, the year we've been in the midst of tax reform, There's been over 1,000 individual bills introduced to change the Internal Revenue Code of 1986 in just 2017. Just half of this congressional cycle. It's really unbelievable. Multinational companies spent over $14 billion in the last decade lobbying Congress and making many campaign contributions to get tax law changes into the law. And sometimes the laws in the amendments, they affect only one company. What a convoluted system we have here. IRS abuses. I would encourage anyone here to log on to the FAIRtax Power Radio. You can get it on iTunes, Spreaker, on your Samsung device as well. In Bob Paxton and Ron Malero do a great job. Shout out to you guys. I know you're on the webinar. Hope you guys are doing well. But I'll give you these episodes if you're interested in listening to these podcasts. They talk about IRS abuses. Episode 39, 51, 53, 54, and 67 are great episodes that you can listen to anytime in your car, and they're little 30-minute episodes. And they go into great, wonderful detail on the horrible IRS abuses. And here's the thing, does the Tax Act change any of those IRS abuses? Absolutely not. Here's some of our Bill of Rights that are infringed every day in the United States with our Internal Revenue Code, the way it's currently situated. The First Amendment, free speech. You guys might remember LBJ. Well, when he was a senator in the 50s, he actually made what's affectionately known as the Johnson Amendment. And that's why 501c3 companies can't speak freely. They can't express their political opinions, etc. Churches can't, etc. They actually have limited free speech, which is a direct violation of the First Amendment because of an arcane tax law. That goes away. The Fourth Amendment over illegal search and seizure, this concept, this arcane legal concept called in rem, that actually says that your money is actually potentially guilty of a crime. So that's how they get around the Fourth Amendment. They can actually seize your bank account without any due process, which is the Fifth Amendment. They can deprive your life, liberty, and property. And there's many examples of that going on. The Sixth Amendment, a right to a jury by your peers, with the tax court system, you don't have that. So you actually have almost half of the Bill of Rights violated with our current IRS system. None of that is fixed with the current Tax Act, but under the FAIRtax, it all goes away. And I know we need to hurry here, Mark, so I'll say Ron and Bob's episode 80 of FAIRtax Power Radio is really good around comparing this law to the FAIRtax. But what Bob and Ron say often is, when we change the income tax code and it grows another 1,000 pages here and there, what it is really like we're on the Titanic. And you remember seeing the movie Titanic from the late 90s, and everyone was kind of like almost in a daze, like, I can't believe this is happening. That's like the income tax. Like, we all know this is horrible, but we just walk around in a daze and we don't do anything about it. And what Bob and Ron say is, this Tax Act and all the tax changes that come through in legislation are an act of rearranging the deck chairs on the Titanic. And so the deck chairs might look really good when we rearrange them, but the boat's going down. And with this evasion, and it's going to trend up to $1 trillion a year within 10 years, especially with this gig economy, it's only getting worse. And with the FAIRtax, you're talking an evasion rate based on preliminary studies of low single digits, like maybe 2%. 3% max, because there's always going to be cheaters as long as human beings are involved. So that's it, Mark. I'll just open it up for questions then.
It's beautiful, man. It's really great stuff. Thank you, Jade. And I know Jade could be easily in this chair running the presentation, as you could tell by his passion and his wealth of knowledge. So thank you for sharing that with us. I want to share a couple things before we go to taking the last questions. We're going to go a few minutes past 9 o'clock, so Eastern time. So if you could stay with us and hang on till about 5 past, then that would be ideal. We want to make sure we get all your questions asked. So, we said a couple of times earlier in the presentation, look, if what you hear tonight aligns for you, and you like what you've heard, or you recognize that it's better than what we've got, and puts us in you and your family and your business in a better position, then, do something about it. I promise you that this is not the thing to be passive on. This is not the thing that is going to happen just because you seeing yourself as just one person won't have an impact. So man, if everybody who thought that would actually just be in action, like we would be so much further along. So there's some things you could do here. You could actually email the president and let him know what you want. But if that doesn't align for you, one thing we encourage people to do is go to popbox.com. This is a brilliant website that aggregates all of the legislation that currently exists in Congress, and it gives citizens a chance to read through it, know what's out there, and then actually to support and comment on why they support it. And if there's enough people that support a certain piece of legislation, you can count on the congressmen and women. We're going to take a real good hard look at that. And then write, email, phone, and visit your congressperson. Jade talked about his experience with it, and he shared more in detail with me about how that went for him. And he said it was a really great experience, and he got to educate that person on the fair tax. And it's just they are available. You just got to be persistent with it. So, and then make a contribution. Jade talked about joining the 1040 Club, and we're going to just show you really simply how to do this. If you go to fairtax.org, and if you go all the way to the right, and you click on donate, and you just join the 1040 Club. It's $10.40 a month, guys. I mean, like really, it's a couple of Starbucks a month, and you multiply that times 100 people, and all of a sudden, it starts to become some really, really great cash flow for this cause that goes into AFFT, Americans for Fair Taxation, and they take that money and they do things with it that we couldn't do on our own, like actually employing highly visible, experienced lobbyists of our own who could lobby on our behalf, and as well as media placement and other things like that. So join the 1040 Club. Like, do it tonight. Get off, if this aligns for you, get off the webinar in 3 minutes and hop on over to fairtax.org and make a contribution. So, all right, let's see what we've got left here, and then we will wrap up. So, I actually don't know the answer to this question. Jade, maybe you do, and maybe some of the other contributors and supporters on the line know. Is there a possibility to purchase or get a copy of the prebate schedule? Likely that's possible. Does anybody, Jade, do you know the answer, or Bob or Randy or Ron, do you know?
I found it online. I've actually got printouts of it. I just don't remember where I got it, Mark. But I'm happy to get it. If someone wants to leave their name, happy to email it to them. I could find it in probably a few minutes. Yeah, likely just Google current fair tax prebate schedule, or 2017 or 2018 prebate schedule for fair tax, and likely you'll find it. And Maurice, if you want to reply to the auto email that'll come to you afterwards, thanking you for coming, we'll be happy to get it to you, and we can email it back to you. This may be our last question. So Frank would like to know how the fair tax will be instituted with existing inventories. Jade, can you speak to that? Can you rephrase that question, Mark? How it will be integrated? Was that the question?
Yeah, instituted. So, product-based companies that have current inventories that they sell at the retail level, they have to pay the fair tax on their current inventory. Well,
that's actually a very astute question. There's a transition clause in the FAIRtax Act, and I encourage you to read it. It's a real quick read, 130 pages, double spaced. I think when I printed it out, it was 60 or 70 pages, a single space maybe. And So if you have existing inventory and you're going to sell it at the retail level, you've already paid embedded taxes under our old income tax system. So on day one, January 1, let's say we transition over to the FAIRtax, you're in a unique little window of a period where then you're going to have to charge the FAIRtax if you sell it at the retail end user level, which will be an inflated price at first there until that time it can work out. So there's actually a clause, a transition clause for that small little period, and I don't know the period if it's a few months or 6 months, where you can, as a retailer there, get a refund, if I recall correctly, for the FAIRtax you have to charge, or you can somehow not charge it during the transition period. But it's a very, very good question, because essentially the FAIRtax at the retail level is replacing those embedded taxes that used to be built up in the cost of everything we buy. And now those embedded taxes fall out and the FAIRtax goes in. So it's kind of same, not exactly, but big picture, same. And so you've got a brief transition period where it's not same, and the FAIRtax accounts for that. I don't remember the exact clause and how that works, but it's accounted for.
That's great. Thank you, Jade. And I'm just sending to everybody right now, and thank you, Randy Fisher, for writing this in. The prebate schedule is on the website member.fairtax.org in the resources section, or fairtax.org/toolbox under downloads. And I'm sending that. Hang on a second. I will copy it and send it out to everybody. Okay, great. All right. That's it. Jade, we did it. We outlasted the questions. So I want to, first and foremost, I want to thank again everybody for being here and taking an hour and 6 minutes out of their evening. You could be catching up on your favorite show or being with your families or whatever you do. So thank you for being here, getting educated. We have a request. And the request is that if what you heard tonight makes sense to you, don't let it stop here. Like, do something. Join the 1040 Club tonight, $10.40. Do it. Get involved. Go to fairtax.org, and you can go to the community section there and find out how you can get involved. And you could do some of the other things that we shared on some of the earlier slides. So, thank you for being here. And then finally, thank you to Jade. Man, you were just really great to co-present with. And I just love and acknowledge and appreciate your enthusiasm and your knowledge that you have for the FAIRtax. And I hope to have you back again if you'll come back on with me.
Yeah, thank you, Mark.
All right, everybody. Have a great rest of your evening and a great rest of your week in January, and we'll see you back on the 4th Thursday of February. Bring a friend. Good night, everybody.